talk about another angle, Chirag, and it's always good to be completely mindful and aware of the asset class and the instrument you're going into, right? So talk to us about taxation. Is gold taxed in the same way as equities, whether it's short-term and long-term? Capital gains, if any, and any sort of exit, entry loads that one should be aware of before making that investment into gold through a mutual fund route?
Sure. So when it comes to gold ETFs, they are taxed up to 1 year based on your marginal tax rate. And above 1 year, it is exactly in line with equities at 12.5%. When it comes to the gold fund of funds or gold saving funds, as they are called, up to 2 years, it's taxed as per your tax slab. And after 2 years, again, it's in line with the equity taxation rate, which is 12.5%. So I would generally presume that anyone has at least 1 or 2 years of horizon minimum to add these asset classes in their portfolio. And having said that, if that is the case, then probably it doesn't matter which instrument you go into, because both are very, very similar from a return perspective. But only taxation difference is that you have to wait for 2 years in a gold saving fund, whereas you have to wait for 1 year up to for the gold ETFs. So taxation has been rationalized now. So this creates one more incentive for investors to look at these efficient products.
Chintan, in your opinion, because of course you don't represent a single instrument in that sense, where do you think, or where is your bias? So when you recommend to your clients to go out and invest in gold, what is your preferred route of investments, keeping in mind taxation, cost, and everything else?
We always recommend, depend upon the investor's profile, but this is a very generic question because it has come now. So if somebody wants a mix of it, then the multi-asset funds are the good asset, because there the portfolio manager can decide about what percentage they wanted to invest into gold or equity or fixed income. Because every asset class of the capital market gives at a different time a different kind of return. So if somebody is in the current horizon, where gold is already rallied, but fixed income is still keeping it long, I would suggest in a multi-asset fund, investor, means portfolio manager would put his weightage on the GSEC more, because it also comes with a capital gain. So interest rate is inversely related with the GSEC price. So if interest rate starts going down, I think with a levered return, what GSEC can generate, a fixed income can generate, will outperform equity as well as gold. So my point would be on a multi-asset funds rather than just straight away investing into gold, because it's just the one asset class. If you trust the fund house and the portfolio manager with their past track record, I think multi-asset funds are the better choice right now.